Hello guys, greetings to you all. Here is another lesson for you, as I told you on the last video we made on the last lesson. So that was coupling directional bias with time and price. So today we are going to be talking on accumulation, manipulation and distribution pattern. So this is a very important lesson. It's a very important lesson, and it's something that plays out on the charts daily on daily basis. Okay, so this will be more like of a practical lesson. It's there is not much theory on this, is much of practicals. Okay, so that's the last lesson for our phase 6. So we're going to be going to phase 7, and then we'll talk about identifying market maker, sell and buy model. Okay, identify market maker, sell and buy model. This is another amazing topic. Okay, so with this topic, AMD pattern, let's get straight to the charts and then I'll show you. Okay, so here we are. I'm going to first of all make it like a small theory, like explain with some line drawing, so that before we start looking at the charts, then you would have grabbed you have to grab the skills or the knowledge behind the pattern. Okay, so AMD pattern simply means just from the name, which is accumulation. Let me just type it here so that you have the accumulation. Let me see. What? You have something like this, accumulation. Then we have a manipulation. We have a distribution, and then optimal trade entry, enter your trade. Okay, let me make this this way. Accumulation, manipulation, distribution. Brackets, AMD. Okay, so that's our topic: accumulation, manipulation and distribution. So this is how it looks like on a line diagram. This is how it looks like. This is how the diagram looks like. Okay, so here, this is where you have your accumulation. This is where you have your accumulation phase. That's where the accumulation is. Accumulation. Let's put it at the top and at the center. Okay, so that's your accumulation phase, and this is your manipulation phase. Price taking the high of this accumulation, manipulation. When price takes the high of your accumulation phase, that's the manipulation phase, right? It manipulates you to the wrong side of the market, and then you have now your distribution. Your distribution phase becomes price distributes now to the right direction in line with the order flow of the market distribution. Okay, so now this is just the simple pattern. It is the same in a institutional order flow that is bullish. Okay, but first and foremost, I want to illustrate this on a candlestick. Okay, and let me just quickly draw it. You have a candlestick that is like this. This is a bullish candlestick, and it has a high and it has a low. Okay, this is a bullish candlestick, right? Let me just put another one, a bearish candlestick. Now, with this, I want you to know how to read a candlestick, because if you do, you'll be able to, this will be very, very easy for you to read. Okay, this is a bearish one. Let me put it right. Okay, right now. Okay, this is a red bearish candlestick, and this is a bullish candlestick. So why am I doing this? This is because here on a bullish candlestick, this is where it opens. Okay, this is the open of the candle. That's our the open of the candle. So when a bullish candle opens lower, what does it do? It can trade down. It first of all trades down to give you the low. It gives you the low of the candle, then it trades up, it gives you the high of the candle. Okay, when it gives you the high of the candle, what happens? It retraces back to give you the close of that particular candle. Okay, those are the main things that happen in every time frame. Even the 1 month time frame, the single candle of a 1 month will have these particular things, and even right down to the 1 second time frame. Okay, this is how price is formed on each time frame. Same thing here for a bearish candle. It opens above, because when this candle closes here, the next one opens. Okay, it could be that it is a bearish candle. It will open here next to the close of this candle, and when it opens here, what does it do? It can trade up and create a high. This trading up to create a high is like a manipulation, right? It manipulates you to people to start buying, and when you buy now, it distributes down. It creates the low, and then it goes back up to close. All right, so here you have the open, the open of this candle. You have the high of it, and then you have the low, and you have the close. All right, so the only interchanging things here with the buy and the sell is the open here, which is instead up, and the close here, which is instead down. That is how price is formed on all the time frames, okay, on all the time frames. So now when the monthly candle opens here, it manipulates down, it creates the low of the candle, it goes up, and it creates the high of the candle, it comes back down and closes. Same thing with the weekly time frame. When the weekly time frame opens, when the weekly candle opens, maybe on Monday you can have a manipulation, a accumulation phase like this, and then maybe on Tuesday goes up, it creates the high of the week. All right, it creates the high of the week, it comes back down. Wednesday opens, goes back to an optimal trade entry for Tuesday, and it trades down, right? Thursday opens, it trades lower and create the low of the week. Then Friday gives a pullback, and then it closes at this level. So how do you draw this on a single candle like this? So this is the open. This is the open. Price went up for Tuesday. Price went up for Tuesday, right? So when price went up for Tuesday, what happened? It creates the high of the candle. Okay, it came back down throughout Thursday. All right, and then it closed here on Thursday, and then Friday opens, goes down, and then it creates the low of the week, came back up, and then it closed at a certain point. This is just how, I wanted just to make you understand how a candle forms within the week. All right, in every time frame, this is how price is formed. Okay, this is how price is formed, and this will make you to understand that when in a day, in a week, in a weekly candle, you have 5 trading days, right? Which means on Monday mostly at times, like I said, it's always not a good day to trade, because it's going to give you some either an accumulation. You can expand to some sites. I'm going to give you details on that, okay? But for now, you need to understand that when Monday opens, it's going to be like an accumulation, or it's going to be manipulative. All right, so when it manipulates that on Monday, Tuesday now can have a direction. Tuesday can manipulate to some kind of a direction. Either it creates the high or low of the week. Tuesday and Wednesday, okay, those are the 70% days that creates the high or the low of the week. Okay, so Tuesday can create, or Wednesday creates the high of the week, and then now it drops back down to Thursday or Friday, creating the low of the week, okay, in line with the direction, in line with the order flow. Suppose that we are overall bearish, price can open on Monday, it trades up like a manipulation to Tuesday, and then Wednesday creates the high of the week, then Thursday expands right down, creates the low of the week, then Friday comes back up and close somewhere. Okay, this is simply just how price forms on all the time frames. Okay, on all the time frames. If you go to 1 minute time frame, it forms the same. You go to 1 hour time frames, how many candles of 15 minutes do you have there? It forms the same. Okay, it forms the same. And now when you look at the daily candle, what happens on the daily candle is that you have three important sessions in a day. All right, which means that as the day opens at 00 midnight, when the day opens at 00 midnight, it is opening with the Asian session. And the Asian session is said to be an accumulative session. So Asian session is something like this. It's going to be it's going to be accumulating. And when London opens, London, this move we call it the Judas swing. All right, the Judas swing, it takes you to the opposite side of the trend for that day. Okay, it manipulates you, and this is during London. When London opens, it manipulates and clears the stop losses of the people that were selling, and then now it goes to the right direction of the day. Normally, a lot of people will know that price is going to sell from here since they're in a downtrend. But what happens? Price has to manipulate and take in orders and clear out the liquidity above here before it sells off, right? That's how the accumulation and manipulation phase works. This is the manipulation, and the ICT calls it the Judas swing. And when you have this move, it now expands down. Expands down now as the distribution phase. Where do you enter? This is the high probability area for you to sell. Okay, this is a high probability area for you to sell if you're waiting for proper confirmation. But for those that aren't waiting for confirmation, if this manipulation phase comes into a POI, which I'm going to show you lately, then you can look for an expansion here on a smaller time frame, and you just enter your trade. Okay, and you target the lows of the Asian session. All right, we have talked about time and price. Okay, so I'm not going deep to that. So this is just to show you how price forms on each candle, on each time frame. Okay, price opens, it creates the low of the day, it creates the low of the candle, it goes up, it creates the high of the candle. So now what happens is that when now, let's say you come to your chart, you see the 1 hour candle, it has already expanded up to somewhere here. Will you just start buying from this area? You know that when it closes, there's going to be the other candle that will form. It's going to create a low before now it continues another move up, right? So these two candles here is forming a structure like this on the 15 minute, all right, which you are going to enter here with your optimal trade entry. Okay, so price will go up like this, come back down. This is where you buy. You don't do, when you see a bullish candle, you don't start chasing price. Okay, you know that the next candle will open, and then that creates a low, or it creates a structure like this where you can enter from, and then you continue your buy. Okay, that's as simple as it is. All right, so this is what happens. Price accumulates, it manipulates to the different sides of the market. This can happen even on the yearly time frame. Okay, it can happen even on the yearly time frame, and this even happened on Bitcoin lately, even on the weekly time frame. Okay, price is fractal. Anything that you see on any time frame happens on all the time frames. Okay, you can have an AMD of the monthly, AMD of the weekly, AMD of the 1 second time frame on all the time frames. It happens on all the time frames. Okay, so like I said, even this happens on the weekly time on BTC. As you saw, it dropped down to a certain level and it was accumulating on the weekly time frame. What happened is price came back up to feel some inefficiency, and then later on it dropped. A lot of people were already expecting a bull market from here, but you should take it as an AMD because your IOF is still bearish and there's still much side liquidity for the market to clear. Okay, so this is how it forms in a bearish IOF. All right, in a bearish IOF, if your market is bearish, then you can expect a manipulation to the upside, and then price expands to the downside. So this is the same thing in an uptrend. In a bullish IOF, price can do a accumulation, it expands down for the manipulation phase, it goes back up, clearing the highs of this accumulation, and then you have your optimal trade entry there, and then you trigger your trade. This trade from here can be from a fair value gap or order block. Okay, you can have a fair value gap there or order block entry, and that's a high probability trade because the market has already taken liquidity down here. Okay, the market has already taken liquidity down here, and then it goes up, clears this liquidity. Since you are in a bullish IOF, you wait for price at a discount. We talked about that, right? You can draw from your listing from your gun box to separate, to divide let's write levels. Okay, to divide the range. Okay, this is already your trading range, the high and then the low. You divide your trading range, this is the 50%, and then you take trades below the 50%, which can be a fair value gap or an order block, depending on what you see at that point. Okay, that's simply how it is on a bullish IOF. All right, you take here your trade here. Your first objective is this high. The second objective as price keeps on going up. All right, so that's it for just this line. Sure, remember it very well. Watch the video several times so that you understand better. So let's look at this here. I'm going to quickly delete this all. I'll just delete this so that doesn't. Okay, so now let's look at this price here. You can currently see that price is in a phase of an accumulation, right? That's an accumulation phase. Accumulation phase. Let's put it at the bottom center. Okay, this is our accumulation phase. Price is accumulating, but what is the problem here? We are on a bearish IOF. Okay, we are on a bearish IOF even from the weekly time frame. We are on a bearish IOF from the weekly time frame and even on the monthly time frame. Okay, so but remember here that on the weekly time frame, price came back to balance this CB here. Okay, but on the daily time frame, is giving us a some kind of accumulation, right? It's accumulating. So will it mean that price will accumulate and just sell off from here? It can, but you have to put everything in line. You have to put everything in line, in context. Okay, you have to put everything in context. This is your range high and this is your range low. So if using our gun box, what happens is that price has not yet even tapped into our premium level, right? Remember, this is your premium and this is your discount, okay, in the trading range. So now what happens is that this, to me, is going to be an AMD pattern because price is accumulating yet to reach my premium area. Okay, and now what happens is that price doesn't just manipulate to air. Okay, price doesn't just manipulate to space, it manipulates to another PD array. Okay, since we're in line with the direction with the institutional order flow, what will happen is that we have our CB up here again. Okay, we have our CB up here. This candle has not been balanced well, so we still have our CB right there. Okay, and price has not filled it yet. Price has not filled it yet. Okay, coming to this level as well. Don't want to. Okay, let me put this. All right, so this is our CB here. So this is what I'll be expecting, that price should do something like this: manipulation and then now distribution. Our first target is going to be this sell side liquidity since we are on a downtrend. Remember, guys, this thing is internal range liquidity to external range liquidity. Okay, so in this case, what is the internal range liquidity? The high of this accumulation, that's the internal range liquidity at this CB. Once price grabs this liquidity, the next objective is the low of the range. The low of the range here is the sell side liquidity, and that's where the market is going to be heading for. Okay, that's where the market is going to be heading for, and it is as simple as that. It's as simple as that. Everything here is in context. You have seen that I have put my daily range. I'm expecting price to go to the premium level. I'm expecting price to manipulate into a PD array, which is this CB. Like I told you, is not just on air that price manipulates to, right? Like even in the case of Asian session, if you want to be trading Asian session, when it creates this accumulation, During the opening of London or the Judas swing, price manipulates up here into an order block, okay, before it sells off. It doesn't manipulate due to space. There should be a previous day order block here that price will manipulate the early traders into that order block, all right? Before now you can take your trade. There's going to be a lot of liquidity here, and this liquidity is into this other block. Okay, there should be another block that was here created in the previous day, and then Asian opens, it manipulates, and then it taps into the other block, and then it drops. All right, that is how it is. Price doesn't form on air. It doesn't go to places that are just like, I mean, price doesn't you get my point, right? So the accumulation and the distribution phase, this context is still works on PD arrays. You cannot be expecting price to manipulate to some space, right? It should be manipulating to a PD array, okay? If it is in a sell mode, it should be manipulating to some kind of a fair value gap or a bearish order block, a bullish order block before buying, all right? So once you do like that, that's how you have high probability, because price is going to be taking this liquidity here and then reacting to this other block where you take your entry and then you sell off. You wait for an optimal trade entry here in a fair value gap expansion or something at that point. Okay, so at this point now, what is above this accumulation is just stop losses. All right, it's just stop losses, liquidity. So we are expecting price to go back up to this level and then it manipulates down, right? So excuse me. So when the market is trading here, a lot of people are stacking. So you see how price went deep to our break. So now price went deep to the CB. It fuels it right even to the consequent encroachment, which is the center of the CB. Even taps right into the consequent encroachment of that CB, okay, right from this candle. So now when price taps in there, if you are not still ready to sell or you are skeptical, now these are the levels that you can get in. Okay, either you choose this as your bearish order block, you wait for price to come back to it. Now, like I said, everything is in context. Everything is in context. This is a bearish order block here, okay? This is a bearish order block. Now, this is a bearish order block. And again, you have a CB here, all right? This is your CB. So at this point, if you didn't sell directly from this area, you can enter from this IOFED, right? IOFED, okay? Institutional order flow entry drill. Okay, that's where you can get your entry. Let me put it at the top. Okay, so this is your IFAD. Either you enter here or you would have entered with, that is, I have two confluences here. Price coming back to retest this candle and feeling this inefficiency, you just sell. Why? Because price is dropping down now and you have this trend line phantom here. There are a lot of traders are drawing some funny trend lines here to be buying on it, right? So when they see this candle, they start buying, and what's happened? Price is now heading for the sell side liquidity, okay? Is it not obvious that price is coming to this level? So why would you be buying on this other block? You need to know that everything is in concept. This other block is not going to hold price. Some people will be buying here now, hoping that, okay, I'll enter here, put my stop loss here, and then maybe waiting for price now to go back up to this level. No, 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 no. All right. It doesn't work like that. You have to first of all know your institutional order flow from a higher time frame perspective. Okay, some will say that this is a breaker, this is a BMS, and they'll even start buying from this other block here. Some people will look at this as a BMS, and then they'll start saying that, okay, where's the last close candle? Looking at this candle to start buying. It doesn't work like that. Some will even look at this as a BMS, and they'll start looking at this other block to buy from. You need to know institutional order flow, guys. All right, that is very powerful. You need to know institutional order flow. Even if price is reacting to this level, it's just a manipulation for people to stack in more buyers, and then price clears them out. Okay, that is just the reason. Now, all these PD arrays in the opposite, that is opposing the institutional order flow, are just to make price to move in a zigzag manner. Okay, remember, price does move on a straight line. So all these opposing things here are just to make price to act in a zigzag manner. Okay, so remember our first objectives is this sell side liquidity. Okay, our first objective is this sell side liquidity. All right, let me even see if going to 4 hour we could have an early entry somewhere around this area. Okay, this was another objective here. This was another objective here, right? Now, and even this year too as well. Let me remove my session break so that the chart will be clear. Okay. Now, look at this level here as well. I want to delete this. Okay, and bring it closer. Now, what about the lesson I told you about breaker blocks, right? This is an SMS. Price doesn't take the high, right? Comes down, take the low of this candle. So immediately price takes this low, the low of this. Remember, this was supposed to be a bearish order block, right? This last down candle. This was supposed to be a bullish order block, all right? But it failed. So the the close of the bearish candle is now going to be a breaker entry. Okay, it's now going to be a breaker entry. That's where after price broke this, you could have entered straight from there, and then you put your stops above, and then you swing the trade right down to this external range liquidity. Okay, now if you didn't enter from there, this is another entry again. IOFD price feel this inefficiency, and then it's sold off again, right? So it gave us this little manipulation here, and what again? Price sold off immediately. Okay, price sold off immediately. Remember this, the power, the draw on liquidity is very high because it's coming right from the high time frame perspective, and we have had a very nice accumulation for some days, right? The price has really been accumulating for how many days? Let me just check that price for like 22 days. Okay, 22 days, that's how many months? So no, that's about a month something. So price has been accumulating for 22 days, gave us a manipulation, and then now a distribution is in play. Okay, so price is now heading for this sell side liquidity, right? Price is heading for, you see how price taps into that sell side liquidity. You didn't see any reaction from any other block, or people will start looking at this candle to start buying, and boom, your stop loss is hit. So you need to look at the institutional order flow here in play. You need to look at the institutional order flow before you try to do any funny thing. Okay, before you do any funny thing. All right. So there was one. Let me just, should I remove all my drawings? There is something here. Let me see daily time frame. If that was going to be some kind of good explanation for us. Where did I see that? Where did I see that? Okay, I think somewhere on this area. All right. I was looking at this equal highs here. Okay, price created this equal highs here, and just above this equal highs, just above those equal highs, we had this other block here. We had the open of this other block, right? This is like a supply zone, if you want to call it that way. So price was accumulating without hitting this. So it gave some equal highs. So what are you expecting? Price to grab this and then start dropping, as simple as that, right? So this thing, it is, I mean, it happens on all time frames. It happens on all time frames, and it's always in line with your institutional order flow. It's always in line with your institutional order flow. Accumulation, manipulation, and then distribution. Distribution to where? To a PD array. Manipulation to where? To a PD array. Okay, everything is in context. Everything is in context. This is just to make you understand that when you are looking at your charts and you meet price accumulating, what you have to do first is to
look above and look below. Where are the PDRs? Are there any levels that price can break this range and hit to them? If you see fair value gaps, other blocks above or below your range, then you know that price is going to be taking the range of that accumulation to a PDRA, to that PDRA, and from there now it's going to sell off, right? Don't tell me you didn't see this fair value gap here. That's very clean, right? So what happens? Price creating this relative equal highs here. You see price going back up. Your institutional order flow is bearish. So what happens? Price manipulates, it clears the stop losses that are above this level right into this fair value gap. And what happens? The accumulate, the distribution phase, it continues, right? Then your first objectives is the sell side liquidity from here. After price clears the sell side liquidity, it retreats and then it continue the bearish movement, right? This is still all in line with the market structure. It's in line with the market structure. You can still see this here again. Price did this series of accumulation phase here. And what happened? Where did price go back up to? Okay. Let's see that. Where did price head back to? Let me even cut this somewhere here. Let's go to the daily time frame. This is the 4 hour. Let's go to the daily and see what we've got from there, where price was heading to, right? So here we are. This looks like the same thing we have been talking about. Was this the same chart we're looking at for? Let go to weekly and see what we've got here. All right. So here is the weekly time frame, and here is our CB, right? That's our CB, and on 4 hour, we spot this accumulation. So above it, we have our weekly CB, right? Everything is in context. Everything is in context. Price goes up to it, fills it after the accumulation. And what happens? Your first objectives is the sell side liquidity. And furthermore, okay, looking at higher time frames. It is that simple, guys. This is just to broaden your knowledge to know what to expect when you come in line with such things like this. When you come in line with such such structures, you need to know what to look out for. Okay. So here is it. This your first objectives has been met. Price went distributes down, it clears the liquidity, and then it went back up, right? So as simple as that. There is no stress in this thing, guys. No stress at all, at all, at all. So I didn't want to make this video that long. I did not want to make this video long. Always stay with the higher time frames. Immediately you are looking at structure and it's confusing to you, get straight to the higher time frames, and then you're going to get the hang of it from there, and price is going to be very, very simple for you. Immediately you look at the 15 minutes, it's not showing you anything. Go straight to the 1 hour time frame. If it doesn't show anything, go straight to the 4 hour time frame. Okay. You should not be looking at price and you don't have to do that, right? Any time frame that is not properly, or you don't understand it, any time frame you don't understand the structure of the market clearly, you just have to go to a higher time frame. Okay, go to a higher time frame, and you'll see things much clearer. Okay, so now this is Euro USD. Today is Friday 18. So looking at this price action here, this is the Asian session. Price opens here and you see like it has been accumulating. So what happened is, after this accumulation, this is the current price, okay? This is the current price. So after this accumulation phase here, what happened? Remember I said the market doesn't manipulate to space, all right? It doesn't manipulate to space. So what happened? We had on the Thursday, price created this inefficiency and it was not filled, right? So today price manipulates to it and you get yourself from there and price goes down. If you don't have a sale from here, right, Immediately price gives you this break of structure here. You can now wait for an optimal trade entry. Okay, you can pull out your FIB from top to bottom of the range, and you wait for your optimal trade entry. If you want a more sniper entry, you can go to 5-minute time frame. Let me see, 5-minute time frame. Okay, this is the 5-minute time frame. Okay, then now you have this on the 5-minute time frame. This is another fair value gap here. So after price tap into that, it gave this expansion, right? This is my bearish order block. I can take the trade from here, or I can wait to take it from this fair value gap. It depends how much you are risking. And even this too, this is called a rejection block, all right? So you have like 3 possible entries from there, but I'll prefer to take the trade from this fair value gap, put my stops just above this high, and then where is my target? What is my target? The low of the Asian range. That's my first objective. The low of the Asian range. That's just my first objective. Where's my second objective now is going to be this lows down here. Okay. That is how it is. All right. Your first objective, you take out partials from the Asian low, and then the previous lows, that will be your third, second, and fourth objectives. Okay. So let's see if price is going to react from the other block or from the, now remember this, we have our range here. Okay, you draw a range. So I will see, you see that my fair value gap taps in directly from, right, my fair value gap comes in directly where the fair value gap is. My 618 and 705. Okay, the 618 and the 705, which is above the 50%. Okay, that's where it comes in around the fair value gap. So that's a good entry, right? That's a good entry right there. The open of the other block is around the 50%. So I'll prefer a much discount level for price to sell from. Okay, so that's where my entry is going to be. And from there, price started selling off. Okay. So we had our accumulation, price manipulates, clears this low, give us a structure break here, and then it starts dropping, right? It is as simple as that. If you didn't enter from there, this is another entry that you would have taken from this other block or from the fair value gap as well. Okay. So like I said, our first objective is this one. So if you want more confirmations after every entry, like in this case, you would have had an entry from from this other block candle here. Okay, your stops will just be here. First objective, the Asian range low, and that is how it is, all right? So our IOF here is, if our IOF here is bearish, if our IOF here is bearish, can be waiting for something like this to continue dropping, all right? You want to take entries, you pull your FIB from top to bottom, you get entries from above the 50%, surely this fair value gap, and that is how you push price. So this has happened today on Friday, the 18th of November. Okay, so you can look at the charts, you see how it forms through the Asian session. Price opens midnight, trades right down to the open of the London. It gives the Judas swing and it gives an expansion down, right? So I'm not going to be making this video long, guys. So we're going to be going next to our topic is going to be identifying market maker sell and buy model. That's phase 7, and the commitment of traders, risk management and psychology. You go to phase 10, putting things together and so on and so forth. So our next lesson is coming from identify market maker sell and buy model. All right, so that is it for this lesson, guys. I wish you the best. Good luck in your trading.